we're not entitled to get excess returns because our tax rates changed. And similarly, if tax rates would go back up, we would expect to get compensated for that. So in that area, and that was $5 or $6 billion for us, but in that area, absolutely goes to the user, the consumer, and it should. Then the question is, with the remainder, does it get competed away or not? And the answer is sometimes it does. Sometimes it gets competed very quickly and substantially. Sometimes it may be slow, and other times it probably won't. The one thing you know is that the change in the corporate tax law was good for shareholders generally and Berkshire shareholders. I mean, and that's what Congress passed, and the intent had to be that if you were going to cut taxes, that shareholders would get a particularly large portion this time, and some of you will agree with that politically, and some of you won't agree with it politically, but you'll all benefit equally. And I think it's human nature, if you're getting a break, to say it's going to work wonderfully for everybody else, and we'll find out whether it will or not. It's very, very, very difficult in economics to measure the impact of single variables. You cannot just do one thing in economics. People kind of learn that in physics and talk about butterflies in China and all that sort of thing. But every question you get in economics, the next or any statement, you should say, and then what? And when you get into the and then what's, you start favoring people who give an answer to that in political life that happens to usually help you in some way or another, including your pocketbook. And we've seen that with this, and it's helped the shareholders of Berkshire Hathaway. I would say that some will be competed away, some by law will go to utilities, and some will benefit Berkshire shareholders. Charlie?
I have nothing to add.
Okay. Station 3.
Hi, Mr. Buffett and Mr. Munger. My name is Kevin, and I'm from Shenzhen, China, currently studying finance and philosophy at Boston College. I have a rather broad question. In this more and more globalized world, what do you think our younger generation can do to best leverage our background and experience of both China and US to create values and further benefit two countries' economy and relationship? And what do you see valuable in a person with a multicultural background? Thank you.
Well, I think in answer to the last question, I think it's terrific to have a multicultural background. And if I never was any good at languages, but if I were in college today and in either country, I'd be learning the language of the other country, because I think it'll be a great advantage over time. The first part of the question, I'd like to have that stated again to me. I want to make sure I'm answering your specific aspect on the. I think it's going to be good for your future, but can we have the microphone on up there again?
So the first part of the question is, what do you think our younger generation can do to best leverage our background and experience of both China and US?
Well, I'd start with being multilingual. I mean, certainly in terms of, obviously you want to be able to express yourself in both. And the better you can understand, obviously, the culture of another society, obviously that's a benefit. But I think the market system, modified as it may be, both in China and in the United States, the way it really does, there will be an invisible hand to some extent that does work to improve the lot of future generations by the fact that both China and the United States and the rest of the world is improving. I mean, it is much better, in my view, particularly in a nuclear world, but it's much better to have people prospering throughout the world, partly through their own efforts, but partly through their interactions with the rest of the world. And we've made a lot of progress in that respect, particularly since World War II. I mean, it was a terrific idea to have the Marshall Plan, instead of behaving like we did after World War I and getting the result that we got. I think we behaved much more intelligently after World War II. So I'm bullish on the future of the United States, but I'm bullish on the future of China and to a significant extent, the rest of the world. People are going to be living better 10, 20, 50 years from now, and I don't think that's something that can be stopped even. Charlie? Absent weapons of mass destruction.
Yeah, well, the multicultural stuff, it wouldn't do you much good to be fluent in both English and Chinese if you were, say, a proctologist in China or a proctologist in Nebraska. So if you're going to use your multicultural background, you've got to work at some interface between the United States and China. And you can raise money in the United States and invest it in China like Li Lu does, or you can be some kind of an importer or a trade specialist. But you got to get near that interface to benefit from bilingual and so on.
But you would bet that the interface will be substantially greater.
Huge.
Yeah.
Huge.
And that's what you want to prepare for.
Yes, and I think that generally speaking, when you get multicultural, you can also be multidisciplinary. But generally, I think people make more money if they're very narrowly specialized, like the proctologist, and that it's much harder to make a lot of money for most people if you try and imitate Warren and me.
I'm glad I didn't meet him earlier. I mean, okay, Andrew.
Okay, this question comes from someone who says, I am a Berkshire employee and shareholder. I read an investigative article from ProPublica on the Washington Post that many of Berkshire's various units only offer 401k plans with high fees that are actively managed rather than the low-cost indexes you have advocated as the best path for savings for retirement. The article's author said he contacted the company and nobody would comment. Will you do something to improve our 401k offerings to match your investment philosophy? And from an operational perspective, how did this happen given your strong views on the topic?
Well, I've absolutely said what many, many times through annual reports, and our managers know what I think about the attractiveness of having an index fund option, but they all have different plans, different histories, and they run their businesses. And who knows, which particular, if you go back to the older businesses, they have defined benefit pension plans generally. Nobody puts them in anymore. And then the question is, do you transition to something else? In the end, we overwhelmingly let our managers make those kind of decisions and others. And my guess is that a very high, significant percentage of people who work at a company that has a 401k plan will have an index fund option, but they may not in some cases. The only thing I think we have asked the companies to have a limit on the percentage I think that they might put in Berkshire's stock through the 401k. We don't want people whose jobs are tied to Berkshire we certainly don't want to be in the position of encouraging them to put 100% or something of their savings in Berkshire itself. I don't want to be in that position. But I don't think even there we've insisted on any company doing that. I think we've probably made that, when we've been asked about it once or twice, I think we've given them that suggestion. But the managers who run the companies, the employees, if they feel, and some of our companies have human relations departments, if they feel that they'd like different options or something like that, they should make those views known to the managers.